represented today on this daily time frame here. We got this primary downtrend line really off the April highs here. Plenty of reaction to validate it. And here we are right now at that 29.30.53. Really is an objective entry short trade. Again, you could take some stops out above maybe above that 30.60.15 price resistance we've been watching for a while here, coinciding with that 50-day moving average. A solid break above, I'd say, it's a good solid break above, maybe 31.09 for a 6% stop loss, versus a 9.5%, and I truly believe if we do retest that 26.49.16 price support, it'll probably most likely, in my opinion, probably be taken out and head down to that. I've been calling that 23.17.68 price support for quite some time now, but again, you could even you could tighten those stops, make them a little bit tighter. Maybe a 3% stop loss right here above that key 29.6507 price resistance, for again almost close to a 10% reward there. So it's a great risk reward ratio in favor of the bears. We got a breakdown in below the zero lines on the oscillator MACD as well, and just a nice, pretty great steep divergence in the RSI as well. But again, and anything could happen. We could break up above the 29.6507. We could potentially break up above it. Now if we break that out and we break out above that 30.60.15, again, I've been calling that as a pretty big key inflection point, but we are in an inflection point as of now. And if we were to take that 30.60.15, you'll start to see some stops being taken out on the short side, and shorts are going to get hit pretty hard, squeezed out. And again, here's some targets up above here that I've laid out: that 32.33.56, 33.90, 36.55, and the 40.74.81. As far as the bullish case scenario, you want to take something I'll break up above here, and you'd see some pretty nice returns: 5%, 10%. T3 here for 8.6%, and that 40.74 for again a 31% pop. We do have a Fed meeting next week, so again, it'd be pretty huge, pretty big catalyst in my opinion to take it up that far versus the downside. I believe the risk reward will play out. So what do we need to wait for? You could take an aggressive entry short trade setup here if you wanted to. Zoom in here on the 4-hour chart. Each candle representing 4 hours here, and this is one thing I love about this time frame is beautiful bullish falling wedge here, and nice, pretty decent positive and bullish divergences here. They need to break on the upside of their zero lines, but again, you want to see a breakout, and what do I say a breakout? You want to see a breakout probably above that 30.34.75 50% fib retracement level, and that'll look like a pretty nice breakout. And I'd suspect some more buyers to step in. Again, right here you could take this. Maybe it does come back down, but again, we'll still have this divergence intact here, and potentially, you want to see the more moves the better in a wedge pattern. You'd like to see a little bit more moves. The more moves the better, the more consolidation. But again, we could potentially still come down, retest that 27.51.12 price support, alongside keeping these divergences intact here, and play for a bounce here. Again, that's the bullish case scenario, but you want to see a break above these zero lines, back above these zero lines, and again, that's what you want to see. Textbook stuff here. Breakout, back test. That's the most bullish. But again, you don't want to step in here. You want to break out. We gotta wait for that breakout, and if not, breakdown. If you want to play to the downside, any of those traders that are playing to the downside, you zoom in here on the hourly. Each candle representing an hour here. We do have crossovers and breakouts above their zero lines here, and technically here off the hourly chart we are in an uptrend here. Very, very near term uptrend though. you know, where you've got a series of higher highs and higher lows here. So, you know, if you wanted to buy, you could buy right here if you're bullish, right at that 29.2373 price support, coinciding with the 50 hourly moving average, coinciding also with the primary trend line here off the 27th of April. So again, you could step in here. That's where you want to see bulls step in here. Maybe sell to resistance at that 29.84, 81. Again, buy back in, and you get the picture. You know, this is what bulls want to see. They want to see a consolidation. They want to see bigger moves to the upside. Again, that's that 30.35 key 50 retracement, fibs off the 4 hourly chart. But again, on the bearish side, if we do get this break and we do break down below that 29.2373, we'll put in really a smaller sell signal on a shorter time frame here. And these negative bearish divergences will only just be steeper, and it would be a retest of its previous lows at that 2808 price support. And again, if we were to take those out, we take out that I'm sure if we were to revisit it, we could potentially take it out. So again, here we go, key inflection point right here up on the daily. Decide if you're bullish, decide if you're bearish. If you're taking an aggressive short trade here, just set your stops above, and if you're bullish, wait for a breakout above.